This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Hello everybody, welcome back. Let's have a quick look at Bitcoin, think about what's going to be coming into next week. So with the S&P and with the Nasdaq and with Bitcoin all reaching to specific lows of significance, we will be looking, I would expect to see over the next week or maybe two, some green, right? This is Bitcoin on your log scale going back from this trend line that's been in existence since 2013. We had one bear market, two bear market, March crash and current capitulative dump. So we can obviously go lower, of course we can. Wicks can go lower, anything can happen, but for the moment on a risk to reward basis, if you think about a long-term projection, this is actually an area where you would think about stocking up and accumulating at a very serious rate, really. Within the 20s effectively is going to be like whale central. They're going to be hoovering this stuff up, you know, they're going to be go crazy in this area because their projection is longer term. It could obviously come down further. We don't know where it's going to go. We don't really know what the economy is going to do, what is around the corner next. We've got black swan after black swan after black swan affecting all these charts, and that is definitely a major component into this, because it's not just Bitcoin that's coming down or has come down, it's the Nasdaq and it's the S&P. But with these two in line as well, thinking about what this wick looks like here, so this is your Nasdaq wick on a weekly, it's a very nice buyback. You know, people came in and really sucked this stuff back up again. But in the grand picture of a consolidation, the best we could hope for would be to move up to the consolidation trend line and then back down again. Look, when the economy is still basically on its ass, we've got inflation figures still rising, although it's slowing. I think what we saw last month, or I suppose this current month, this CPI report, would suggest that next month we will see that inflation has already peaked, and that will add more confidence into the market. That's something that the market needs right now. At the moment, when there's no confidence, you can't really go into it. You can't justify a position in it, or if you are, you're effectively dollar cost averaging into the Nasdaq or into the S&P. Because effectively it is an up only chart. I mean, there's only one thing really to look at, which is the fact that it goes up only. So market participants, you know, depending on their time frames, will be picking it up around these levels, as we've already seen. But if you really want to go to town on something like this, you would either wait for a major significant low to be hit, one of these two, before you go hard and heavy, or you wait for the breakout and then the continuation. We were talking about all of this yesterday about how stocks and well, crypto I suppose, but stocks specifically, you know, they've been in a crazy mania phase since the V-shaped recovery and the money printers turned on, and it created a false economy, more false than it usually is, which is fine. And now what's happening is we're coming back down to earth. People think we're going to go into a major recession, but a recession technically is already in play, because a recession technically is 2 quarters and 20%. So we've got almost 2 quarters, and we've got literally almost 2 quarters, and we've got 30%. So a recession is effectively in play, but is it going to play out in the same way, which is a sell the rumor, buy the news? You know, by the time you hear the word recession, maybe the worst is over, but we'll see. Again, you know, it's all heavily speculative, but the way that everything's moving as a result of, you know, Federal Reserve monetary policy, then we've got food shortages, we've got fuel prices, and we've got supply chain disruption, and we've got all these other things, and because of that, again, it's just insult to injury. The main thing is the CPI reports, so the inflation data. If we start to see that come down, see that it's peaked, which I think we'll see next month, given the progress that was made over the last month, I think confidence will then enter the market for, again, stocks. It's an up-only chart. People want to get back in on it. You know, this is a decent discount for what would be considered to be the long run, which looks like this. And that would be the same across for the S&P. You know, we're having an up-only chart here. Where do you want to get back in again? You know, after what kind of correction? 20%, 30%? Where are you going to get it from? It is going to go back up again. So that's a 20% exact from the top to its current low. You can wonder why people are getting in at those levels. Well, let's face it, it's a 20% correction. People are going to get back in on it. It's a very sturdy chart to want to be part of. No matter the highs and the lows, it generally works out in the end. Slow burn though. Now, if you're looking for something for a little bit more spice to it, we can cast our eyes over to the Bitcoin chart. So again, your log scale looks like this, suggesting that, okay, two bear markets, one huge crash, and we came down to this, and it's still held. This is an okay area. But if you take ourselves off the log scale, obviously the trend line isn't relevant off a log scale. What we do see as well is a 50 exponential moving average getting tagged perfectly. If we go back in time as well, we see how relevant this has been in both bull and bear markets. 50 exponential came into existence around this level. This is the end of the bear market, 2013, 14, 15, and then going back into a huge parabolic run. What happened shortly after that? So a parabolic peak back down 2018. We did go down below it ever so slightly by about 18%, and then once it was reclaimed, bull market begins once again. Then we continue with that and pulled back down into it in March and stayed above it and continued on. So this area is an area of significance for Bitcoin. And again, it is an up-only chart. We turn the log scale back on, turn all this nonsense off. It is an up-only chart. So if you want to take part in a market which goes up only, you look at very significant areas like this log scale, like the 50 exponential, and you think, well, historically, we have found bottoming areas around here, and the returns that shortly after, in comparison to these major indices that we've looked at, comparatively to those, the returns have been awesome. Yeah, absolutely awesome. We're talking 10x or more. So I think people will see it for what it's worth and see it for what it is. Match that with a peak inflation data, and think to themselves, let's get in on this one. Whether it's a 2 or a 3 year investment, we're certainly looking for some decent returns at this level, despite a potential 20-30% further correction to mark the absolute low. What's a 20 to 30% down amongst friends when your target is certainly going to be a 5 or maybe even a 10x from there over a period of a few years. So people will see it for what it's worth. That's basically what it is on a TA perspective. You marry that with the economics data, and effectively it looks like summer is probably going to be one of major accumulation. Whales hoovering this stuff up. Retailers probably too scared to get back in. Altcoins don't really serve a purpose at this point in time. We spoke about the Bitcoin dominance and how we'll use this chart once, as we used to do, as a rotationary event, and getting back in and out at supports and resistances from Bitcoin to altcoins. And that again is an extremely valuable way of trading crypto. That's how we generally did it from 2019 through to the end of 2020, when the chart was extremely useful in being able to get into Bitcoin and out of altcoins back into Bitcoin, and so on and so on and so on, and marking some really significant alt seasons. This is where we made enormous amounts of money through this. And rather than holding on to Bitcoin when it reached its peak in 2020, we moved into altcoins when nobody wanted them. Everyone was saying Bitcoin is the one, altcoins will end up being nothing, but it's a counter trading environment, and people usually don't want something. It's usually time to think about getting it, but marry that with a chart like this and you get the confirmation that you need. Then at the moment we're in no man's land at a low level, so it doesn't really help altcoins really to be in this kind of vibe. Maybe we could get a rotation around here. It'll be a mini one. We spoke about it yesterday. I won't go into depth, but effectively altcoins are a bit of a no-go zone, unless of course you're in it for the long run and you've got a specific plan for that altcoin. You're not looking for a short-term trade. Although, of course, they're likely to get dragged up by Bitcoin, but it will be interesting to see what happens to their Bitcoin pairs and their Satoshi values over this next week or two, as Bitcoin probably moves back up to what I would say would likely be around about 35, mid-30s. As we see this weekly, we've got a 10 exponential showing that we get rejection here, rejection here, rejection here. That's currently coming in this week at 37. We're going to be down further next week, probably down to about 36. So I would say on the first pass, a move up to maybe the mid-30s is probably the area that we're going for, and at best we could shoot up into the towards 40. But with the current chart looking like this, with the short signal on the weekly, it would just be an opportunity to either get out or short or whatever. Me personally, I'm not going to be short. Well, I might short. It depends where I am at the time. But we're basing a weekly signal here for continuation down. So I think that over the next week or two, we're going to have some move up across all markets. Then we're going to come back down in anticipation for the next rate hike, which will be early next month, and then we'll start to move up again shortly after that, as the inflation data shows that we've peaked. It doesn't mean that there's going to be any kind of V-shaped recovery, but it means that markets will start to see some more upside and some decent accumulation, and then probably start to get back to where they were prior to the pandemic, which is a steady, standard, normal type of growth that these charts effectively are famous for. Bitcoin, Nasdaq, S&P, they're up-only charts. And yeah, of course, Bitcoin's a bit spicier than the others, but they are up-only. And so market participants will want to take part once again, once the economic data is more favourable. Anyway, I've got to leave it with you there. I've got to get going. I was out camping in my back garden with the kids last night, and it was a terrible idea. They seem to have a nice time, but I feel like I've been kicked in the back. So I'll leave it with you there, guys. Got to go and nurse myself. Anyway, have a nice evening, have a nice day, enjoy the rest of the weekend, and I'll see you next week. Feel free to join the Patreon as well, or just the Telegram, whatever you fancy. It's all in the description below. Take it easy.